Hi everyone. In preparation for exam number 1, you will need to thoroughly review chapters 1, 2, and 3. In this series of study guide videos, we'll work some example problems that will cover some of the information tested in the exam. Your study of chapters 1, 2, and 3 should not be limited to these practice problems, but they will help you get started with your review of the chapters. I know it's very tempting to just listen to the problems and review the answers without actually taking time to do the calculations. But quite frankly, you are wasting your time if you approach these videos that way. You will get so much more out of these videos if you will pause the video to give yourself time to calculate the answer on a piece of scratch paper, then start the video again to check your answer. If you got it right, you'll feel great. If you didn't get it right, you will see a detailed analysis of the problem that will help you improve your skills. Then go on to the next problem. In this video, we'll talk about some ratios that are covered in the chapters. Let's get started with the return on assets ratio. Return on assets is a profitability ratio discussed at the back of chapter 1 in your textbook. The ratio is calculated as follows: net income divided by average total assets. So here's a series of questions and calculations for you. On what financial statements would you look to find net income? Please write your answer down on a piece of scratch paper, then start the video again to check your answer. Yes, you would look at the income statement to find this year's net income. Number B, average total assets is not shown on any financial statement. You can find total assets on the balance sheet, but you will not see average total assets on the balance sheet. So how would you calculate average total assets? You would calculate average total assets just like you would calculate any average. Add up a series of digits, then divide by the number of digits that you added up. So beginning total assets is one thing. Ending total assets is the other thing. So add those two digits together and divide by 2. To calculate the average total assets. Okay, now we know how to calculate the average total assets, but where on earth do we find beginning total assets? Write your answer down on a piece of scratch paper, then start the video again to check your answer. Total assets is a number shown on the balance sheet. So you would look at last year's balance sheet to find this year's beginning total assets. Remember that the balance in any asset account at the end of last year carries over to the first day of the current year. The same is true, by the way, of any liability or permanent equity account. Basically, last year's ending balance of any balance on the balance sheet is this year's beginning balance in those accounts. So if that's true, then on what financial statements would you look to find the ending total assets? Yes, you would find the ending total assets on this year's balance sheet. This problem is going to require you to do some calculations, just like you will have to do calculations on the exam. So get your calculator ready. and calculate Newton Company's return on assets at December 31st X2, given the following information. And by the way, I want you to express your answer in the form of a percentage showing 1 decimal place. So given this information, net income on Newton's income statement for the year ended December 31st X2 was $240,200. Their total assets on their December 31st X1 balance sheet was $632,300, and their total assets on their December 31st X2 balance sheet was $546,600. You have all the information necessary. Please calculate Newton's return on assets at December 31st X2. The calculation would be net income divided by average total assets. Beginning assets of $632,300 plus $546,600 divided by 2. Average total assets are $589,450. So net income of $240,200 divided by $589,450 equals 0.4075. Change that into a percentage with 1 decimal place, and it's 40.8%. Move the decimal over 2 places to the right, and then the rounding. This 5 makes that 7 go up to an 8. If that had been less than 5, the answer would have been 40.7%. Well, that's all for the debt ratio. The return on assets ratio. When we come back, we will talk about the debt ratio and work a problem with the debt ratio. See you next time.